Here is what the technical signals are telling us about the upcoming week. Stephen Suttmeyer is the chief equity technician at BofA Securities. Stephen, I think everybody's trying to understand, what the charts are telling us about where we really are. We have earnings, obviously, this week. We also have the backdrop of the Fed and Roy Bostock making some comments over the weekend. What do the charts say?
Yeah, sure. I mean, when we're looking at the U.S. equity market, for instance, we do have contrarian bullish readings from the AAII individual investor surveys, bearish sentiment. It's as high as it's been since 2013. Also above where it was at the pandemic low. So, individual investor sentiment is quite bearish, meaning a contrarian bullish signal. So the S&P did hold a support last week, defended it roughly in the 4,200 areas. I think what is critical for this week is for the bulls to get some follow through, meaning they can rally a bit more, regain the 40-week moving average, which is roughly around 44.51. And there's a critical resistance here on a short-term basis around 44.95 to 45.46. And if you can't regain that level sooner rather than later, the potential for a dead cat bounce increases. And the potential is you need to get a washout day. You roll back down, get a washout day, 90% down stocks and volume in those stocks and the NYSE would help to do that. So we haven't seen those big climactic selling days just yet, even though sentiment is actually quite negative.
So if sentiment's negative, but you're suggesting the sentiment's negative among retail investors. Is the sentiment negative among institutional investors?
I mean, when you look at cash levels, for instance, institutional cash levels from ICI, the money market fund levels, they're actually closer to the peak that they saw in 2020. So I would argue there is a lot of cash on the sidelines already. It just depends on whether there's still that last seller to sell and drive the market to the point where you actually see the true capitulation, meaning a big volume, negative breath type of day, which we have not seen yet on this corrective phase
Stephen,
in January.
When people talk about capitulation, what to you does capitulation look like? What does the low of that have to have? I think everybody who's watching you right now, they're saying, okay, tell me the low and tell me the possible high so that I understand what the dynamic here is. What's the upside risk and the downside risk?
I mean, right here, right now, support's 4,200. The upside risk is around 45.50 or so. Again, I mean, what happens is this. If you can't rally based on that signal that we got last week from the 3-month VIX versus the VIX, which was a climactic signal, beyond those resistances, I think you're going to get another downward spiral that could take you below 4,200. And on that type of movement, you'll break a support that goes back many months. On that break, there is the potential for real selling to come in where you see that 90% down, you see the good old-fashioned ARMS index tick above 2, daily closing basis. Those are those traditional panic signals that you get when you hit a low. We haven't seen those yet.